Today, we're going to chat about for a minute about looking at owning your own home. A lot of people are a little frustrated with some of the frustrations. Yes, you're frustrated with the frustration. So some people are frustrated with some of the higher prices and the high interest rates that are going on right now in the market. And a lot of people are paused their buying and selling process, or it's been slow in the market is what I hear a lot. So we're going to talk for a few minutes about ways to overcome the higher interest rates. I'm going to talk about 6 great major ways to do that, and make sure you stay put and stay tuned for the last way is my favorite. And it's a way that'll kind of a trick that a lot of agents don't understand and don't talk about, but it's there for you to understand and get you set to save you probably the best rate you'll ever be able to get right now is by doing the 6 way. So the first thing, of course, people are frustrated. Right now, I talked to a couple lenders. They say right now, if you're VA, FHA, and you have good credit, you could be as low as 6.5, 6.9, maybe a 5, 6.1 if you're really, really good and have a little money to put down, things like that. If you're conventional, things like a little more different or USDA, you may be a higher rate, closer in the low 7s. And depending on the lender, you might even be in the 8 at sometimes if you don't have the right kind of lender. Make sure you have a broker to work with and not just a regular lender. It does make a big difference. Now, one of the ways you can overcome the interest rate and how to do it, the first major way is to look at new homes on the market. If you get a chance to look at new homes and see what they're offering and get an idea of what these new homes have, a lot of them, have some really good opportunities and some good rates that you can take advantage of. I was looking today and some new homes are as low as 4.99%. And that's if you can start at a fixed 30-year 4.99 right now, that's great. Some people don't even have that. Even after the big boom in 2020 and all that, it was going on crazy there where everyone was buying, 2022, everyone's buying rates were in the 2s, 3s, whatever. It was insane. So, but now if you look back past that 2020 and 2019 area, there are still some good deals with new homes out there, and it doesn't cost the buyer anything. So if you're looking to buy a home, it costs you nothing if you go with a new home, and you could start for as low as 4.99 or even lower. And what I mean from that, there's a lot of new homes, and you can do this with any home. It doesn't have to be new. The second option you can do is called the 3-2-1 buy down or a 2-1 buy down. What that means, let's say your interest rate is the 6.5. So you minus 3% off that. So your first year, you're at a 3.5. Second, 4.5. Third year, 5.5. And then once you're on your fourth year, you get to that 6.5 rate. That's over the whole rest of your loan for the next 27 years. It's a really good way to start. And then the good thing is because the seller or the builder is paying all this up front without you having to worry about it. You don't have to come with the money out of your own pocket or anything like that. They're paying for that for you. So if you can come up and do that and have those opportunities taken care of for you without having to do your own pocket, it's a no-brainer. And then because you're only paying the interest for the loan for those couple of years, so whatever that interest would be, it's paid. You're only paying the normal then. Anything different would be the interest difference. That's being paid again by the seller or the builder. It can't be paid by the buyer. It has to be called seller concessions or the builder concessions. And then once you have that there, and it's good to go and you like it, if the rate were to suddenly drop down to another 3%, for example, you can refinance at any time, and there's no extra fees. You don't have to pay anything back. It's just a regular refinance. Most banks right now, if they're doing loans, if they want to refinance with their bank, they're going to do that refinance at no charge because they want to get loans right now because the market is slower. So it's very interesting that way. So a 3-2-1 is a great idea. Also, it's great. The third way you can do to save interest rates and to save some money on interest rates to get a better rate is called a rate buy down. Now, this is different than the 3-2-1. You would just have a rate buy down. Let's say you're at a 6.5 again, and you want to be at a 4.5 or a 5.5. You can buy the points down, and then it's a fixed rate. You can buy down and pay as much money as you want to buy the rate down to whatever you want. There's no set rate. There's no set product. Say I'm at a 7, I want to get to a 5. As long as I can come up with the difference and come up with the cost of what that would be, not a problem. I can do that. My rate's done. I'm in. I'm good to go. A rate buy down is a great option. Again, usually the buyer does not pay for this out of pocket. It's usually paid by the seller or the builder. This is a great way to have a fixed rate. Like I said, right now, I know some new homes that are at 4.99 fixed because of this rate buy down. It's a great, great product. The fourth way that I see a lot of people are getting over some of the great, I guess the fourth way, losing track of my ways. So the fourth way that we get over that is to get some gift funds from family, friends, things like that. And you can do that. It has to be a family or someone like that if you get direct funds, unless you're selling something. We've had people who've sold like guns, cars, kayaks, all kinds of crazy stuff, whatever they need to do it because they want to buy a house and it's worth it to them. So that fourth way we can get the gift funds, and either family or church can help as well. Those are the two big ones that most people get the gift funds from. And then you can use those to buy the rate down to a fixed rate, to do the 3-2-1 buy down. It gives you extra money to worry about. Now, the fifth way, before I get to my most favorite one, the fifth way is to put money down and to have a lower monthly payment. So you can either say, hey, I'm going to buy this home for 200,000. If you have 50,000 to put down, you can put 50,000 down and have a lower monthly payment. Or, which you're smart like you are, you would put 30,000 down, or 35,000, and keep 15,000 to buy the rate really low. And then not only would your rate be lower, but it'd be fixed, and also your monthly payment would be lower, and you could save a lot of money that way. It's easy to either put the money towards the rate or towards the down payment off the price of the home. You save more money usually, not always, but usually you save more money buying the rate down than you would buying the actual price of the home in the current market where the rates are between the 6s and 8s. You can save more money that way. My favorite way, the number 6, I know you all been waiting for, I love it. This is a great way to get a low rate, is to just assume the rate that's out there. For example, right now on my personal home, I have a 2.37, incredible rate. I don't want to sell, even though I want to look for land and I want to buy something, I don't want to sell. But if I did, I could let someone assume my rate. Another veteran or a non-veteran can also get a VA loan. A lot of people don't believe that. They say, you have to be a veteran to get a VA loan. You don't. That's a whole different discussion, though, talk about some of the myths of lending. So a veteran can get it, or another non-veteran who can qualify. If you can get approved for it, they can just assume my loan, and they assume the rest of my mortgage payment at that low rate, at the price that I'm paying per month. Great way to save some money. Great way to get set up that way. And then you just have to pay the equity. So say I had 300,000 equity, someone would go take my loan over, pay me the 300,000, and that would be paid at closing through title. And then I would get my equity still, just like as if I sold it. And then the client would be able to have that incredible rate right there, ready to go, save lots of money. That's a great way to do it. A lot of people are starting to look at assumptions now, because there's so many really low mortgages out there from 4 years ago, 5 years ago, that people don't want to sell, such as myself. I'm like, I'm not going to sell. I'm going to keep my home at my amazing rate, because I know I'm not going to get another 2.3 anytime soon. But if someone would come and assume it, or another client would say, hey, you have an incredible rate of 3 or whatever, and that's a fix, and they assume it, pay the equity, they can move in the home, just take over the balance, and then they pay the client the equity. That's another great way you can overcome that. Those are great. Again, 6 ways you can look at getting some great ways to buy the rate down, get fixed rates, do the 3-2-1, do a buy down with the seller, get gift funds, put more money down, or mix it match, and also assume the rate. If you can take advantage of those 6 ways, you can overcome the frustration that's out there right now with a lot of people looking at owning a home and buying a home. I hope that's helpful. Please like and subscribe if you haven't. We'll talk to you soon.